One phone call to your bank could recover $1,200. Here is what to say. There is a phone call most seniors have never made. A single conversation with their bank that takes less than 15 minutes. And that for the average senior account holder recovers between $800 and $1,200 in fees that were either improperly charged, legally prohibited, or applied to their account without the disclosure the law requires. Not a negotiation, not a complaint that goes nowhere. A specific legally grounded request using exact language that bank compliance departments are trained to respond to. Because when a customer invokes the correct federal statute by name, the bank's exposure changes entirely. The reason most seniors have never made this call is not that they lack the courage to challenge their bank. It is that no one has ever given them the exact words to use. A general complaint. I think this fee is unfair. Produces a general response, a waiver of 1 month's fee, and a suggestion to switch account types. A legally specific request, one that names the federal regulation, identifies the violation, and states the exact remedy being demanded, produces a fundamentally different response. Banks reverse fees when customers demonstrate they know which law was violated. They rarely reverse fees for customers who only know they are unhappy. This video gives you the exact script, word for word, for 5 specific fee categories where federal law is clearly on your side and where the average recovery across all 5 is more than $1,200. If this is your first time on this channel, subscribe right now. Smart Retirement Life covers the banking laws, tax rules, and government programs that put real money back in the pockets of seniors and retirees every single week. Free plain English. Hit subscribe and turn on notifications so you never miss it. Before I go further, I want to address 2 groups of people who are thinking about skipping this video, and both of them are leaving money on the table. The first group is the senior who has already tried to dispute a bank fee and was told no. They called, they complained, they were offered a one-time courtesy waiver at most, and they accepted it because they did not know what else to say. That experience was not a final answer. It was the result of a general complaint meeting a trained customer service representative whose job is to resolve calls with minimal cost to the bank. The call I am describing today is different in one critical way. It references specific federal law. A customer service representative who tells a customer, "I'm sorry, but that fee is standard policy," does not have the authority to override a compliance obligation. The moment you name the statute, the call escalates to someone who does. The second group is the senior who banks at a large national institution and believes that large banks simply do not reverse fees for ordinary customers. This group is also wrong, and specifically wrong about large institutions. Large banks have the most exposure to regulatory action and the largest compliance departments. A customer who invokes the Consumer Financial Protection Bureau by name and references a specific regulation has just become a potential data point in a regulatory audit. Large banks reverse fees for legally informed customers precisely because the cost of a CFPB complaint far exceeds the cost of a $200 refund. I will show you exactly how to make yourself that customer. So why are banks charging fees that federal law prohibits or restricts in the first place? The mechanism is automation. Your bank's fee schedule is not reviewed by a human being every time it is applied to your account. A fee rule is programmed into a system. The system applies the fee to every account that meets the triggering parameters. Balance drops below a threshold. A transaction type occurs, a service period expires. The system does not check whether you qualify for an exemption. It does not check whether the fee was properly disclosed. It does not check whether a regulatory change last year eliminated the legal basis for the charge. It applies the fee and moves on to the next account. The Consumer Financial Protection Bureau estimated in its 2023 annual report that American consumers paid over $12 billion in bank fees that year, a significant portion of which were either improperly disclosed, applied to accounts that qualified for statutory exemptions, or charged at rates above the regulatory cap. The bank is not malicious. The bank is automated, And the automation is designed with one default assumption that most customers will not know which fees to challenge or what law to cite when they do. That assumption is correct for the overwhelming majority of account holders. It will not be correct for anyone who watches this video to the end. My name is Smart Retirement Life. I have spent decades studying federal consumer protection law and the specific intersection between banking regulations and the financial reality facing American seniors. People who built their savings carefully over a lifetime and who deserve to keep every dollar of it that the law says is theirs. The situation I find most frustrating is not the senior who was defrauded in an obvious scheme. It is the senior who has had a relationship with the same bank for 20 or 30 years, who trusts that institution and who has been quietly paying fees that federal law either prohibits or caps month after month because no one ever told them the law was on their side. These are not passive people. They are people who simply did not have the specific legal language that turns a general complaint into a demand the bank is obligated to address. That language is what this video provides. Here is exactly what we are covering in the next 20 minutes. I am going to walk through 5 specific fee categories where federal law gives you a clear and documented right to a refund. For each one, I am going to give you the exact words to use on the phone. Not a general script, but specific language that references the actual statute and states the actual remedy. Then I am going to show you what to do if the bank says no on the first call, including the exact CFPB complaint language that produces a response within 15 business days. And I am going to cover the 2 bonus moves that maximize your total recovery, including how far back the law allows you to demand a refund, and the one sentence that almost always produces an immediate supervisor escalation. Call Script 1. The monthly maintenance fee waiver. Step A. Bust the misconception. Most seniors who pay a monthly maintenance fee believe it is a fixed cost of having a bank account, something every customer pays regardless of circumstances. That belief is almost always incorrect. Every major bank account agreement includes specific waiver conditions, minimum balance thresholds, direct deposit requirements, age-based senior account qualifications under which the monthly fee is reduced to 0. The bank's automated system does not check whether your account meets those conditions. It charges the fee and processes refunds only when customers request them with sufficient specificity. Step B. The actual rule. The Truth in Savings Act implemented under Federal Reserve Regulation. DD requires that all deposit account fees be clearly disclosed and that any waiver conditions be stated in the account agreement. If your account meets a waiver condition and you have been charged the fee anyway, the bank has collected a fee without the contractual basis the account agreement establishes. That is a recoverable charge, not a matter of bank policy, but of contract law. Step C. Dual group delivery for the lower income senior whose primary income is Social Security direct deposit. The direct deposit waiver condition is your strongest argument. Virtually every major bank account agreement waives the monthly maintenance fee when a qualifying direct deposit above a specified threshold, typically $500 per month, is received. Social Security direct deposits meet this threshold at every major institution. If your Social Security deposits directly to your checking account and you have been paying a monthly maintenance fee, you have been charged a fee the account agreement itself says you do not owe. For the comfortable retiree with higher balances, the minimum balance waiver is your strongest argument. If your combined balance across accounts at the same institution exceeds the threshold in your account agreement, typically $1,500 to $5,000, the monthly fee should be 0. Pull your account agreement and find the exact threshold. If your balance has consistently exceeded it and you have been paying the fee, the recovery argument is identical. Step D. The exact script. Call your bank's customer service line. When the representative answers, say exactly this: I am calling to request a refund of monthly maintenance fees charged to my account. Under my account agreement, the monthly maintenance fee is waived when a qualifying direct deposit is received each month. My Social Security payment has deposited directly to this account every month for years. I have been charged the monthly maintenance fee during this period in violation of the waiver conditions stated in my account agreement. I am requesting a full refund of all monthly maintenance fees charged during the period my account qualified for the waiver under the Truth in Savings Act disclosure requirements. I would like to speak with someone in your fee resolution or compliance department. The phrase compliance department is the escalation trigger. Customer service representatives handle general complaints. Compliance departments handle regulatory exposure. The moment you ask for compliance, the nature of the call changes. Step E, expected recovery. Monthly maintenance fees at major banks range from $12 to $25 per month. A 2-year refund at $15 per month is $360. At $25 per month, it is $600. This single call for this single fee category frequently produces the largest individual recovery of the 5 scripts in this video. Call script 2, the overdraft fee on an unapproved transaction type. Step A, bust the misconception. Most seniors who have been charged overdraft fees assume the fee is simply the cost of spending more than the account contained at a given moment. Under current federal regulation, that assumption is outdated and in many cases incorrect. The Consumer Financial Protection Bureau's Regulation E requires that banks obtain affirmative opt-in consent from account holders before charging overdraft fees on debit card transactions and ATM withdrawals. If you did not sign a document specifically opting into overdraft coverage for debit transactions, every overdraft fee charged on a debit card purchase is a fee collected without legal authorization. Step B, the actual rule. CFPB regulation. Section 1005.17 prohibits financial institutions from imposing a fee for paying an ATM or one-time debit card transaction into overdraft unless the consumer has affirmatively opted into the institution's overdraft service for those transaction types. The opt-in must be documented in writing. The bank must retain that documentation. If the bank cannot produce a signed opt-in form for your account, every debit card overdraft fee is subject to a full refund demand. Step C, dual group delivery for the lower income senior on a fixed monthly income. Overdraft fees are disproportionately concentrated on fixed income accounts, where the timing of bill payments occasionally creates brief gaps before the next deposit arrives. If you have paid overdraft fees on debit card transactions without ever signing an overdraft opt-in form, every one of those fees is recoverable under Regulation E, regardless of whether your account was actually in overdraft at the time of the transaction. For the comfortable retiree, your exposure is typically lower, but the principle is identical. More importantly, CFPB guidance finalized in 2024 caps courtesy overdraft fees at $8 for institutions that offer the service. Any overdraft fee above $8 on a transaction you did not specifically opt in to cover is above the regulatory cap and subject to a refund demand on that basis alone. Step D, the exact script. I am calling to request documentation and a refund related to overdraft fees on my account. Under CFPB Regulation E, Section 1005.17, overdraft fees on debit card transactions and ATM withdrawals require affirmative written opt-in consent from the account holder. I do not have a record of signing an overdraft opt-in form for these transaction types. I am requesting that you provide me with a copy of any signed opt-in documentation on file for my account. If no such documentation exists, I am requesting a full refund of all overdraft fees charged on debit card transactions on my account for the past 2 years. Please escalate this to your compliance department. Step E, expected recovery. Overdraft fees range from $25 to $35 per occurrence at most major banks. A senior who has been charged 4 overdraft fees per year for 2 years without a valid opt-in form on file has $200 to $280 in recoverable fees from this script alone. Call script 3, the paper statement fee without proper disclosure. Step A, bust the misconception. Banks across the country introduced paper statement fees in recent years, typically $1 to $5 per month, framed as an environmental initiative. What most account holders do not know is that the Truth in Savings Act requires advanced written notice before any new fee is introduced on an existing account. A fee introduced by embedding a notice inside a monthly statement, the very document the customer is now being charged for receiving, does not meet the advance notice requirement. The fee was introduced without compliant disclosure and is therefore not a valid contractual modification to the account agreement. Step B, the actual rule. Federal Reserve Regulation DD implementing the Truth in Savings Act requires that consumers receive advance notice of any change in fee terms that would adversely affect them. The notice must be clear, conspicuous, and delivered in a manner reasonably expected to come to the consumer's attention. A fee change buried in the terms and conditions section of a monthly statement does not meet this standard under current regulatory guidance. Step C, dual group delivery. For the lower income senior who depends on paper statements, you are entitled to receive a paper statement. You are not required to pay for it unless you affirmatively agreed to a fee schedule that included it with compliant advance notice, meaning a separate, clearly labeled communication that specifically drew your attention to the new fee before it was charged. For the comfortable retiree with multiple accounts, the paper statement fee is a small dollar amount per account, but compounds across multiple accounts and years. The aggregate recovery is meaningful, and the legal argument is equally strong across all accounts at the same institution. Step D, the exact script. I am calling to request documentation and a refund of paper statement fees charged to my account. Under the Truth in Savings Act and Federal Reserve Regulation DD, any new fee requires advance written notice that clearly draws the account holder's attention to the fee change before it is introduced. I am requesting a copy of the advance notice your institution provided before the paper statement fee was introduced on my account. Specifically, the date it was sent, the method of delivery, and any documentation of my acknowledgement of the fee change. If compliant advance notice was not provided, I am requesting a full refund of all paper statement fees charged on my account. Please escalate to your compliance department. Step E, expected recovery. At $3 per month over 2 years, the recovery is $72 per account. Across 3 accounts at the same institution, it is $216. Modest individually, but this is typically the fastest and least contested of the 5 scripts. Banks frequently reverse paper statement fees immediately when the Regulation DD notice requirement is invoked. Call Script 4, the Savings Account Excessive Transaction Fee. Step A, bust the misconception. Many seniors have been charged fees for exceeding the transaction limit on their savings accounts, typically 6 transactions per month, and have paid those fees under the assumption that the limit is a permanent federal banking requirement. It is not. Federal Reserve Regulation D, which imposed the 6-transaction monthly limit, was suspended indefinitely in April 2020. Any excessive transaction fee charged on the basis of the old Regulation D limit after April 24, 2020 without an independent contractual basis in the current account agreement is a fee without regulatory foundation. Step B, the actual rule. On April 24, 2020, the Federal Reserve amended Regulation D to remove the 6-transaction monthly limit on savings deposits. Banks may maintain their own internal transaction limits, but only if those limits are clearly disclosed as an independent contractual term in the current account agreement, not as a reference to the old Regulation D requirement. Any excessive transaction fee based solely on the suspended federal regulation is a fee the bank no longer has regulatory authority to collect. Step C, dual group delivery for both groups equally. Pull your savings account agreement and look for the transaction limit disclosure. If the agreement references Regulation D as the sole basis for the limit without providing an independent contractual transaction limit, every excessive transaction fee charged since April 2020 is recoverable. The recovery window under most state consumer protection statutes is 2 to 3 years. Step D, the exact script. I am calling to request a refund of excessive transaction fees charged on my savings account. Federal Reserve Regulation D, which previously imposed a 6-transaction monthly limit on savings accounts, was suspended indefinitely on April 24, 2020. My account agreement references Regulation D as the basis for the transaction limit without providing an independent contractual limit. Fees charged on the basis of a suspended federal regulation without an independent contractual basis are not legally supportable. I am requesting a full refund of all excessive transaction fees charged on my savings account since April 24th, 2020. Please escalate this to your compliance department. Step E, expected recovery. Excessive transaction fees range from $5 to $15 per occurrence. A senior charged 3 times per year for 3 years at $10 per occurrence has $90 in recoverable fees from this script. Higher frequency users recover proportionally more. Call Script 5, the minimum balance fee on a direct deposit account. Step A, bust the misconception. Minimum balance fees charged when an account balance falls below a specified threshold are among the most common fees on senior checking accounts. The misconception is that the fee applies uniformly to all accounts below the threshold, regardless of other account characteristics. In virtually every major bank account agreement, this is incorrect. Direct deposit of a qualifying amount and Social Security payments universally qualify exempts the account from the minimum balance fee under the waiver conditions stated in the account agreement. The bank's automated system charges the fee based on balance alone and does not cross-reference direct deposit status against the fee exemption. Step B, the actual rule. The contractual basis for this refund is the account agreement itself, specifically the minimum balance fee waiver condition that lists direct deposit as an exempting factor. This is a contract claim rather than a regulatory claim, which means the bank's own document is the evidence. The bank cannot argue that the fee was properly disclosed when its own account agreement states the condition under which the fee is waived. Step C, dual group delivery. For the lower income senior, this fee is the one most directly targeted at your account profile and most clearly contradicted by your own account agreement. The combination of a fixed income that occasionally dips below the balance threshold and a direct deposit that should waive the fee entirely creates a recoverable fee on almost every month the charge appears. For the comfortable retiree, if your balance consistently exceeds the minimum balance threshold, the monthly maintenance fee script from Call Script 1 is more relevant. This script applies specifically to accounts where the balance sometimes dips below the threshold despite qualifying direct deposits. Step D, the exact script. I am calling to request a refund of minimum balance fees charged to my account. My account agreement states that the minimum balance fee is waived when a qualifying direct deposit is received each month. My Social Security payment, which exceeds the qualifying direct deposit threshold stated in my account agreement, has deposited directly to this account every month. I have been charged minimum balance fees during periods when my account received qualifying direct deposits in violation of the waiver condition in my account agreement. I am requesting a full refund of all minimum balance fees charged during months in which a qualifying direct deposit was received. Please escalate to your compliance department. Step E, expected recovery. Minimum balance fees range from $8 to $15 per month. A 2-year refund at $12 per month is $288. Combined with the monthly maintenance fee recovery from Script 1, the total from these 2 scripts alone frequently exceeds $600. The 5 scripts I just gave you cover the most common fee categories and produce the highest average recovery for most senior account holders. What I am about to add is for 2 specific situations: the senior whose bank denied the refund request on the first call, and the senior who wants to maximize how far back the recovery goes. If your bank reversed the fees on the first call, you are done, and the first 5 scripts fully covered what you need. But if you received a denial or a partial reversal, these next 2 points are what turn a no into a yes. Bonus 1. The CFPB complaint that forces a response within 15 days. When a bank denies a legally grounded fee refund request on a customer service call, the denial is almost always a customer service decision, not a compliance decision. The way to escalate from customer service to compliance without additional phone calls is a formal Consumer Financial Protection Bureau complaint. Go to consumerfinance.gov and select Submit a Complaint. Choose Bank Account or Service as the product. Select the specific fee type from the drop-down menu. In the complaint narrative, include the following elements: the specific fee category, the date range of the charges, the total amount at issue, the federal statute or regulation you cited on your call, the bank's response, and the specific remedy you are requesting. The CFPB assigns a case number and transmits the complaint directly to the institution's regulatory compliance team within 2 business days. The institution is required to respond within 15 calendar days and to provide a substantive resolution within 60 days. The complaint and the institution's response are logged in the CFPB's Public Consumer Complaint Database, which affects the institution's regulatory examination record. Banks reverse fees through the CFPB complaint process at a significantly higher rate than through direct customer service calls. Because the complaint creates a documented regulatory record that auditors can access. A $200 fee reversal costs the bank nothing compared to the regulatory exposure created by an unresolved CFPB complaint. Use this process whenever a direct call produces a denial. Bonus 2, how far back you can demand a refund. The recovery window for improperly charged bank fees depends on the legal basis for the claim and the state where the account is held. Under the Truth in Savings Act, the federal statute of limitations for civil claims is 1 year from the date of the violation. Under most state consumer protection statutes, which provide broader remedies and longer windows than federal law, the recovery period is 2 to 4 years. California, New York, and Illinois provide 4-year windows under their state consumer protection statutes. Most other states provide 2 to 3 years. The practical approach is to request a refund covering the past 2 years on the first call. Most banks will negotiate within a 2-year window rather than face a formal regulatory complaint. If the bank offers only 12 months, respond with this exact sentence. My state consumer protection statute provides a 2-year recovery window for undisclosed or improperly charged account fees. I am requesting a refund for the full statutory period. Then file the CFPB complaint if the bank does not agree to the full period within the first call. For most seniors making all 5 calls and pursuing the full 2-year recovery window, the total refund across all 5 fee categories falls between $900 and $1,400. Let me bring everything together with the one idea that connects all 5 scripts. Your bank is not charging you these fees because you deserve to pay them. Your bank is charging you because its system is automated, because the fee applies to every account that meets the triggering parameters, and because the institution's entire fee revenue model depends on the assumption that most account holders will not know which fees are legally challengeable or what statute to cite when they make the challenge. You now have 5 specific scripts. Each one names the exact federal law. Each one states the exact remedy. Each one includes the escalation trigger, the phrase, "Please escalate to your compliance department." That moves the call from a customer service conversation to a compliance conversation, and you have the CFPB complaint process for any denial that does not resolve on the first call. Smart retirement. Life's message for this channel is always the same. The law protects you more than the institutions collecting money from you want you to know. The only thing standing between most seniors and that protection is the knowledge of which law applies and the exact words to invoke it. You now have both. Make the calls. Before you close this video, do one thing. Send this to one senior in your life, a parent, a sibling, a neighbor, a friend. It does not matter whether they bank at a national institution or a local credit union. Every single one of the 5 fee categories we covered today appears on accounts at institutions of every size across the country. The person you are thinking of right now is almost certainly paying at least one of these fees every single month. And they have never been given the specific legal language that turns a complaint into a refund,